Death claims are one of the most consequential things a super fund does and one of the messiest. Today we're talking to Kerry Vogel, Head of Insurance Claims, Performance and Delivery at CBUS, about what it takes to redesign a claims process from the ground up. Let's get into it.
Welcome to That Super Show, the podcast where we talk about all things super from the inside. I'm Neil Benson, Chief Product Officer at Chandler CX.
And I'm Sarah Penn, CEO of Mayflower Consulting. Each week, we unpack what's changing in the industry, what funds are wrestling with, and how tech and regulation are shaping the landscape.
Sometimes we bring in expert guests, but mostly it's just us having a real conversation about how super is working and what could make it even better.
Let's get into it. Welcome to That Super Show. Hi, Neil. How are you going?
I'm great, Sarah. How's it going with you?
I am very good, and we're joined today by Kerry Vogel from CBUS, who is going to talk to us about claims handling and fixing it, which we're very excited. So welcome, Kerry.
Thank you, Sarah, for having me today.
Pleasure. Why don't we start with telling us a bit about yourself and how did you come to agree to take on the job of trying to sort out CBUS's death claims handling?
That's an interesting question, isn't it? So, hi, everybody. I'm Kerry Vogel. I'm the Head of Claims, Performance and Delivery at CBUS. I've been at CBUS for almost 2 years now. And if you work that back, then you'll realise that I joined at a time when things were quite challenging at the fund. Coming to CBUS for me was something that I saw as an opportunity. And I know that probably sounds a bit weird for some people. And I do recall when I had let some colleagues and other people know that I was moving to CBUS, they said, "Are you crazy? Why would you do that?" But for me, I've always taken on challenges where I felt like I was very passionate about making things right and adding value and implementing change. So for me, it was an opportunity. I didn't see it as a negative decision. I obviously expected that there would be challenges, but sometimes a challenge can lead to some really, really good opportunity and some really great things.
Yeah, well, an opportunity is certainly one way to characterise the situation at the time. I recall, a lot of bad press, Senate hearings and all sorts of shenanigans going on, and it wasn't just one fund. There was a few funds in the regulators' crosshairs at that point. Some have come through this better than others. I know some funds just thrown lots of people at the problem to try and clear backlogs and things, and that's, I guess, that's one way to try and solve the situation. But as far as I understand it, CBUS has taken quite a different approach. Can you outline, this situation you stepped into and what your first reaction to that was?
Yeah. I guess I had got a bit of a distinct advantage when I joined the fund because I wasn't in the significant detail of having to respond to members or beneficiaries that were in this very challenging environment. So I had the opportunity to really step back and take some time to think, okay, what is the actual problem here? And having come from an operational environment as well, very similar to CBUS, the challenges are not necessarily different at CBUS compared to other funds. It was that there was some specific things about the data that led me to think, what is it that we could potentially do here? So the fund generally is significantly male and young. There's some low financial literacy in relation to superannuation. So, young men don't care about super. They're out working on work sites and they're doing their thing. So paying attention and making a death benefit nomination is the furthest thing from their mind. So looking at the CBUS data, the binding nomination data is very, very low.
Right.
So that then leads to, okay, so what does that mean for a death claim? How does that play out? So I put that aside and park that. And then the other process that the industry has lent into is claim staking. So we generally lent into this process a number of years ago to provide some comfort and I would say security for the trustee to make sure they're making a death claim payment to the right person. And whilst that is very helpful for the trustee, it can mean that the process is quite lengthy for claimants, particularly as the Australian family is not what it used to be. And
Right.
there's lots of family challenges, and there can be multiple children, partners, relationships. The other piece was, going back to the nomination side of things, it's prescribed that it's on paper. It has to be witnessed by two people that aren't beneficiaries to the nomination, and signed on the same day, and then emailed in or mailed in because you need a wet signature. So that in and of itself is challenging, particularly today. People don't do paper, do you? When was the last time you posted a letter?
Not if I can help it.
Exactly. So young people, again, it's just like that's the furthest thing from their mind, and that's like you want them to put a pen to paper even, let alone the next steps that's required. So it's like, how do we increase that? What can we do? So very early on in the piece, I looked at the regulations, and we're in a very regulated environment, superannuation. It's like, so how can we make this process better, working with the regulations that we have, and increasing the nominations from a binding perspective. And I sought, obviously, internal legal advice initially to work through that. So before I'd gone anywhere, it was off the side of my desk, working with people close to me. How can we solve this and start unpacking it? So we looked at who else is doing things in the market. There were a couple of funds doing a few different things in the market, but not many.
No.
So we looked at the online binding nomination process and non-lapsing. That was one of the solutions, but only part of the solution, because you still got to increase those to get the result. So you got to get a high level of take up of that. So probably around my target's around 50% to try and increase our nomination rate to 50. We should be able to.
We've got a nomination rate in the single digits.
Yes,
4-5% is pretty
they
good.
are.
From there to 50 is a big stretch.
I look at things from the point of view of, like, why not? Because if you nudge and encourage, and as part of your contact with members, that you can see on their profile when we're in contact with a member that they haven't got a nomination, is to do it then. And then if it's going to be, it'll be on our app, it'll be on our website. So do it there and then. We're in a pretty unique situation at CBUS too. We have some great opportunities to have contact with members that are a little bit different to other funds. So we have a front counter service in every capital city. So if members come into our offices and talk to and ask questions about their super, might want to do withdrawal or whatever, it's about that as well. Hey, we can see you don't have a binding nomination, and explain. And then we have workplace coordinators that can also go out to members' houses or on work sites and things like that to encourage. Separate to that, whenever someone contacts our contact centre, hey, we can see you haven't got a nomination in place. So all of the touch points are an opportunity to increase. Our non-binding nomination process at the moment is digital, and we have about 40%.
Okay.
Of members with a non-binding nomination. So for me, it's not unreachable. So we'll be essentially replacing that type with a non-lapsing binding one. And we know there's a direct correlation between a binding nomination and the death claim duration. So that's one part.
Can I ask a question, Kerry, about the regulations there? Because I've read through the CIS Act, specifically in terms of nominations, and lapsing, which is typically a 3-year nomination that is binding, does require a wet signature, 2 witnesses. Everything has to be dated correctly. The witnesses have to be, typically they're not beneficiaries, and there's a whole bunch of rules around it. And that's all enshrined in the CIS Act. And then in the CIS regulations, there's this mention of a non-lapsing binding nomination, which doesn't need all that rigmarole. And it seems to me that there's a slight conflict between the CIS Act on one hand, the CIS regulations on the other, and it's almost like creating a trust, creating a lapsing binding nomination, and it's almost as if the law got it run the wrong way. It's harder to create a lapsing nomination than it is to create a non-lapsing nomination. Do you think we were speculating at this at the Future Fund Admin Forum, whether there was a mistake in how these things were drawn up, whether the law has got things run the wrong way? Do you think that's possible?
I think sometimes, particularly with super regs, that there's a delay in moving with the community and the community expectations and the community's understanding of things, and what we need to do to support members. I mean, the banking industry moves with much more agility with technology, these things particularly. The ability to operate and do a non-lapsing binding is definitely not specific to the specific regulation in the SIS Act. And of course, as part of our analysis of this, we've sought internal and external legal advice to make sure we're operating in the right environment. The other thing that's really important here is that people get very concerned when you're doing something online compared to doing it on a piece of paper. Now, I don't know why people think that if they've got a form that's been witnessed, that could be done with less coercion or vulnerability than it could be done online. It's an interesting thing. People do get nervous when they think something's been done online, but there's other checks and balances that we're putting in place in relation to making sure or having a high level of comfort that the person that has made that nomination is the actual member. And then separate to that, at death, we test the validity of that nomination. So if a long time has passed between when a nomination was made, all the checks and balances are in place to see if potentially if the member was ever divorced, if there was another child born. But the other piece that gets spoken about as well is, did the member have capacity to make that nomination at the time? Yeah. So then when we look at our death claim process, we'll have things in there like how soon did the nomination get made to when the member passed? What did the member die of?
Right.
To provide that level of comfort. And then we're also putting an MFA as part of that, making a nomination, treating it like a financial transaction. Whilst there's no financial attribution to that particular process, there is a higher level of risk. So we're putting MFA. So a member will log in and they'll be MFA'd. Member will want to update, create, revoke a nomination, they'll be MFA'd. So there's a couple of steps there. I feel that the ease of making the nomination compared to the risk of someone having coercion compared to the membership is low.
Yeah. Okay. That's a really good risk assessment that you've undertaken there to try and think what can we do to make these things easier, smoother, and at the same time put in some checks and balances to weigh up the risks later.
This episode is brought to you by Chandler CX. You know that 8-page PDF form that scares off half your members before they finish page 2? We turn it into a smart, mobile-first digital form, pre-filled, validated in real time, signed on the spot, and straight through processed into your registry. Visit chandler.com.au.
You mentioned claims staking earlier, and I've worked in claims a little bit, but not very extensively, and I thought claims staking was some kind of obligation that trustees had to undertake. But what you've outlined is it's not. It's something that the trustee decides whether or not they need to do, maybe on a case-by-case basis or on a policy basis. For those not involved a lot in claims management, can you help us understand what claims staking is and why it takes so long and what the risks are that are trying to be mitigated?
Of course. Sure. So it's been in place for a long time, and generally a fund will have chosen to consider claims taking as part of their death claims process. And it's generally where there is either no nomination in place or a non-binding nomination in place, because a non-binding nomination is not binding on the trustee. So by the sheer nature of claim staking, if someone passes with that nomination type, it's the onus is on the trustee then to seek out anybody who may have a claim on that member's benefit. And that can involve a process where we write out to interested parties and we will afford them 28 days to respond.
How do you know who's an interested party?
Yeah, well, this is the thing. This is where it gets a bit interesting, because sometimes what will happen is somebody will fill a claim form in or make a phone call and say so-and-so's died. They might not necessarily be an actual beneficiary or a potential beneficiary, but therein lies the starting of the process. So based on the information that is generally provided, which is the first thing will be the death certificate, And
Yep.
you'll have, if there was a spouse, if there was a divorce, if there were children. So then you start going, okay, no nomination, spouse, children, got to write to all of them. And then you start going down that path. And then what happens is sometimes the floodgates open and you get a whole raft of other people contacting you as well. So in and of itself, the process takes generally end to end for one claim staking cycle about 6 weeks by the time you write, receive and write back again, potentially.
And you said one claim staking cycle. Can there be more than one?
There could be, which it's, and again, depending on the nature of the affairs of the person that's passed away and their relationships that they've had, it can, you might all of a sudden receive a notice from another party through the claim staking process, and then
right.
they have to be afforded the same 28 days, or the trustee can make a decision or proposed decision and say, okay, we're proposing to make this payment to so-and-so, and then we let everybody know that that's what we're doing, and then they have an opportunity to object. And so then the death claim objection process falls into line, and that process lasts 45 days because it then becomes part of an IDR, death claim objection process. So it can be very protracted. Now, in all of this, the beneficiaries will all be going, oh my God, why is this taking so long?
Yeah, where's my money?
Where's my money? Yeah. So that's where I started with, if I picked apart the whole process of where is the biggest impact that we could have where somebody doesn't have a nomination.
Yeah.
And we know as well, coming back to the superannuation literacy piece, but not just at CBUS, but I think more broadly in industry, if a member thinks they've signed a form, they think that's the thing. That's binding.
Yeah, it's done.
It's done.
I still remember being surprised when I moved into super when in my sort of my mid-20s. I still remember being surprised that you could fill out a form and then the trustee, and telling all my friends, and that the trustee could basically ignore it because it was just a suggestion.
It's a suggestion.
How can you fill out a form that's a suggestion?
Exactly. So there's that piece as well. So looking at the whole death claim experience holistically was through the lens of simplicity. So how do we make all of the aspects simple? So by having a non-lapsing binding nomination and having no other nomination on offer, it's simple. Yeah. We can talk to our members and say, this is what you sign and this is what we will do. And then we're bound to do that.
They have the non-lapsing, there won't even be a form. The non-binding, there won't even be a form for it.
Exactly. And then we can say to them, please also, though, through your life changes, remember to make updates if you do, otherwise, and it can become invalid. And then it's on us as a fund as well to provide appropriate reminders throughout the member's life stage, and more than annually to remind them to make the updates and why that's important. So again, as part of this work, we're going to be providing an online video on our website of why it's important to do this, a quick video of how to make one online, just those little snippet things that just take a minute or two to go, oh, that light bulb moment. And then our PDS and our collateral can say, this is the nomination type that you'll be making and this is what we will do. And then in the absence of having nothing, we'll also do this. And that's where I think we've taken the biggest leap, because again, it's about certainty and simplicity. If I was a person on the street and looking through claim files, listening to calls from families and beneficiaries through their process, if I died with nothing insofar as no type of nomination, what would I generally expect would happen to my money?
Yep.
So, okay, well, probably you'd expect it to go to your partner. That would be the first thing that might come to your mind. And then the question is, oh, okay, then if I have no partner, where would it go? Oh, if I've got children, I probably expect it to go there. And if failing all of those things, then where else would it go? Probably, well, that's potentially my estate. Okay. So we tested that. We tested that internally with our legal team, tested it with our coordinators and our front counter staff. What do you see all the time? What do people tell you when you're going through this process? And, we considered a few things, and it was challenging, because sometimes significant change is challenging for people. It's like, wow, we're really going to do this? And I describe it as, people just don't get on the edge. Sometimes they get on the ledge. They're already there before you've started, so you've got to sort of bring them back from the ledge. But it's good, because it gets people really thinking about what it is that the problem actually is. And then to support that, it's, again, going back to the data, which I'm a very data-led person when I look at problems, that where do we make payments to? Who do we make payments to for the last couple of years? What did we do? What was what was it telling us? And it aligns. So around 30% of our claims had been paid to spouses in the last 2 years. Then the next bucket were children, and the next bucket was the estate, and then all the combinations come into play. So it was pretty well aligned. So we thought, okay, that's good. That's really supportive. Okay, so what else can we anchor to here that supports our position? And so if I've got no nomination, that we can give people a level of comfort that it's the right thing. So we looked at what happens in intestacy laws that are already in place in New South Wales and Victoria. If you have no will, for example.
Yeah.
And if you have no will, which is a very similar situation to having no nomination in a super environment, it's basically the same again. So then that was what we presented to the executive and more broadly the board. This makes sense. Now, I'm not suggesting this will solve all the problems, because there will always be those very challenging circumstances where you might not have sufficient information that you can anchor to follow that process. But there's sufficient discretion in our trust deed that enables us as trustee to decide who to pay based on the information we have to hand. So there's a number of steps that we take as part of that process. But generally, it will follow that order of payment, because most of the time you get a death certificate, you get a claim from the spouse, and you can make a payment.
So, Kerry, have you had to make quite a few changes to your trust deed to accommodate some of these new policies? See, we talked about the removal of the non-binding nomination, removal of lapsing nomination, and then the flow of a member's benefit in the event of their passing, and how you're going to follow a kind of predetermined set of beneficiaries. I imagine all of those would have had changes made to the trust deed to accommodate those.
Yes, that's correct. And it's very important to do that for a couple of reasons. From a complaints perspective, if a complaint arises based off our decision, then the fund has followed their fund rules. And it also provides certainty and direction for our people making these decisions, because the trust deed is the guiding principle of making the decisions, and our processes then can flow on from that. So the trust deed, it basically gives us that tool to be able to do what we want to do, and it's very clearly documented. Again, the trust deed's on the website, so we've been very transparent about what we're doing.
Could you have achieved the same thing by just updating an internal policy, which is less transparent because obviously it's internal, and have the trust deed just refer to, the trust will have a policy in effect at the time to govern how assets flow in the event of members passing? What's the difference between amending a trust deed and just creating a new policy?
That's a really good question, and that was something that was considered. I'll be honest, it was me that actually requested it to be in the trust deed. So it was open just to have a policy, or even like an addendum to the trust deed, which I have seen in past in other superannuation funds. I felt, though, that strongly the trust deed was the most appropriate vehicle to have this change made for the fund in relation to having it very clearly documented for the and a trust deed change requires board approval.
Yes.
So then
Yes.
we have
It's a big deal.
we have clear transparency then to our directors and our executive that they understand that this is what we're doing, and again the direction and the tool for our people. Oftentimes, I have seen a policy become misplaced, amended.
Yeah.
Without potentially appropriate oversight, and then it loses its formality, and people then make interpretations potentially. And then similarly through the complaints handling process, when we're dealing with potential complaints with AFCA and others, it's that we have this instrument that we can provide, or even a solicitor. So then you don't have that situation if a solicitor is representing a party that they ask for our policy. It could be the wrong version that someone sends. It could be all of the things, right?
Yeah.
But the trustee's the trustee, and that's it.
Yeah, it's interesting, isn't it? You've done the work to figure out what really is the best way to handle this, and then you're basically enshrining it in law for your fund that this is how it is going to work, and that way it can't. I mean, it can still be changed because obviously the trustee could be changed down the track, but it can't easily be whittled away or made overly complicated by death by 1,000 cuts or whatever because it's kind of enshrined in the constitution of the fund.
Yep.
Yeah, and that's just an experience thing. That isn't a CBUS thing. That's just years of being involved with complex environments and seeing how they can potentially become, as you say, watered down and then lose the intention.
The other thing you mentioned at the Future Fund Admin Forum was the validity of a binding nomination. So when a member has submitted it and the trustee has accepted it, you can still invalidate it if a member has a life event subsequent to the nomination. If they have a child, if they get divorced or remarried, there's a few others, and you kind of automatically invalidate the nomination because you don't know if that would have changed the member's wishes, which I think is a fascinating point as well. Can you expand upon that and confirm whether my recollection's true, first of all?
Yeah, so there were some things in the CIS Act that refer to when a nomination could become invalid. But similar to what we did with deciding on the payment process was a number of scenario tests of what we would consider what is suitable for a binding nomination to become invalid based on life events. And we did a lot of testing with our legal team and our product team. We were working together, a round table. Again, a very similar thing. What would we expect, and what feels the most fair if one of these life events occurred? And again, the nuance of that is described in the trust deed. So we've been again quite clear on what those scenarios are. And I know there's often sometimes the birth of another child. That isn't necessarily something that's followed across the board, but for us, we thought, well, people sometimes forget to do these things, or if one of the beneficiaries dies, what do we do? That's something that is often not specifically catered for, but we've sort of covered those in the deed as well. So again, it enables us to stand behind that when we're making those decisions if it gets contested.
Yeah, it's interesting too. I know in another super fund that we do a bit of work with, that they the biggest complaint that they have actually is on their binding nomination. Well, the way it works, because it's sort of a quasi-government fund, the way it works is if you die and you're still married to that person, then they automatically get the money, and it causes endless grief because there's no kind of consideration of the fact that you might have been separated for years. You could have been, married for 5 minutes in your 20s and just never bothered to get divorced. And 40 years later, you die. they get the money. And it causes endless complaints and issues because it is so counter to what people think is fair and reasonable. And that's exactly the issue.
That's
it's
exactly
just kind
right.
of...
When we were speaking to our coordinator cohort, and that was their concern. Honestly, that was their concern, as well as the understanding that if somebody gets divorced, that the nomination just becomes invalid. So
just has to. It
just has to. And then there's some other wording around being in I can't remember the exact wording of the trustee right now, but it speaks to you living in a relation, like living sort of in a relationship. So that way, that situation where somebody has been long separated, that can be considered because, like I said at the beginning, Australian relationships these days are, they're complicated.
Yeah, people. It's not just married for life, and that's the end of it.
That's exactly right.
So, Kerry, a lot of the folks on the front line at CBUS handling claims, as I understand it, are probably still working with your third-party administrator. And I'm wondering if this new clarity, the improved process, has given that operation better way of working as well. Has that relationship between the trustee and its administrator improved? And what have the outcomes been like for both parties?
Yeah. So, as part of the implementation of the program, we were very clear with the administrator of what our expectations were, and it also then enabled us to have very clear documented processes in relation to what we're asking for at the time of when somebody passes. Historically, because of claim staking, we would have potentially asked for much more than we actually really need. Now, in ASIC's report 806 and subsequent after the press last week 831, it speaks about reducing friction and not just continually asking for more and more and more and more. So because we have this order that we're following, we're able to say, if it's a spouse, these things are the minimum things. If it's a de facto spouse, we might want something else. If it's children, then we need these things. And it's very prescriptive of what we're requesting at the time. And we have a checklist that's going to be implemented that's going to basically enable people to complete that. So yes, 100%, it provides the administrator with absolute clarity of what the request is at the outset, what the conversation should look like, and giving comfort to the beneficiary what the process will be. I would say we're on that journey. Change is challenging, and at the moment we have a situation where, because we implemented the initial part for no nomination members that passed from 1 December, so there's still a large cohort that if people are passing with a non-binding nomination in play, that will follow the claim staking route.
Yep.
So it won't be, but later this year we will be implementing the process where non-binding nominations will no longer exist, and then we'll be in that phase of everything that's either a binding or a nothing, and you'll follow the standard process. So sort of got two processes happening right now. It's not challenging because we have very defined processes, but it will become clearer, and I think we'll get more synergy and more productivity and efficiency post that final implementation.
I was going to ask you about, has this new claims process transformed everything? But I guess it is incredibly slow to roll out and realise those results. And thank goodness, because in order to know whether the process is working, it's triggered when a member passes away, which you just can't really test very easily.
It's quite, it's an interesting thought, because post-implementation, everyone's going, okay, how's it going? It's like, oh, that's really sad. We're waiting for people to die. So it does sound a little bit morbid. We have been tracking the volumes, and noting that the volume isn't as significant as, because the cohort is not as large as it will be later in the year that fall into the new process. But we are seeing some good indications of the process is significantly reduced. I sort of caution too, though, that it isn't always just about the duration. It's a really important aspect of what we do, and it's making sure that we don't don't cause undue delay where we have enough information to make a decision. But, I've taken some time to listen to calls that might come through the administrator or to our contact centre. And look, most recently, I listened to a call where we had made an outbound call following up for the claim documentation, and it was to a mum, and she'd lost her son, a young son. And we were just following the process. We hadn't received things, and it had been, a couple of weeks. And on the call, she thanked the person for reaching out, and she said, "I don't have to hurry though, do I?" So that for me is that's such an important aspect of us having the empathy as well throughout the process. So whilst I'm absolutely conscious of making significant improvements to how long a claim takes, it's more making sure that this is a human interaction. This is not just about SLAs on a page. This is really important. This is really important stuff. So yeah, I'm very conscious of that too.
Yeah, I'm really delighted that you do listen into those kind of calls, because it is a very human moment, and particularly, the trustees and the board and the executive, they haven't sat in the contact centre a lot, but to listen to those calls, to hear the transcripts, to understand the very personal stories of the families of members, I think it's really important that those stories bubble up, and we recognise that we're dealing with very tragic situations.
Hopefully the making all the rest of it simpler will help the people who are in the call centres to be able to be more empathetic and have the time to be able to do all that, because it is more straightforward. They're not having to try and think, hang on a minute, which of the 65 different forms am I going to need? And maybe I should ask for that other one too. And there was that other case where someone needed these other 3 things. So maybe if I ask for them now, that's a good idea. They can literally just focus on, I just need these 2 things, and then I can think about you as a person.
Exactly. And that's what I sort of say to our people at CBUS too. This isn't about just speeding up the process so we can have efficiency gains of the fund. It's far from it. This is about giving people time to do the service, provide the service, and show the empathy, and to help people fill a form in if they need to, or suggest that we have grief counselling available if someone needs it. All of the other things that can lead to a much better experience than just how long it takes. But the simplification, I think, for me is the key, and us having then the understanding of where a claim is in the process. Is it with the beneficiary and they just need some time, or is it with us, and have we taken all the steps that we need to and to make a decision as quickly as we can? So it's just turning the thought process on its head a bit more, and considering a claim through a life stage of a claim, as opposed to it's just the beginning and an end.
Yeah.
Kerry, you've given us a lot to think about there. The certainty of non-lapsing binding nominations, removing the other options because there's far too many. Having certainty in place in the trust deed about what happens in the event of a member's passing when there's no binding nomination in place. Improvements to the systems, the documentation that's required, the nudging and the guidance that you can give to members to make sure they do have a nomination. Are there any other major milestones on your improvement journey that you are yet to put in place that we haven't discussed yet, that are still on your to-do list?
I think for death claims, we've really looked at it very holistically. So I think all of the things you described there, when you articulate it, it's like, oh yeah, that's a lot. I think it's then analysing the data post-implementation for a period of time, and then again checking back in, is there something else that we need to do? After being in the industry for such a long time, I don't think it'll ever be done, to be honest.
Yeah.
My thought process is other claim types and other things that we can do at other claim types, and to look at them in a very similar way, so, rather than just making a small tweak here or doing a thing there. I like to look at things. What's the actual problem we're trying to solve here? So there's other opportunities there. We've really looked at our communication as well, and there may be other digital opportunities that we can employ in the future. I mean, at the moment, there's some barriers there to digital application for death claims, but I think they're definitely worth exploring. There's a few death notification services out there. Again, they're on my radar to see what they can potentially do. So there's always the next thing. And it either keeps me in trouble or out of trouble. So it just depends.
I think never consider yourself done is a very dangerous position to be in. So I'm thrilled to hear that there's still a lot of potential opportunities on your roadmap. So that's great to hear. There's lots of other claims types as well. Early access claims, hardship claims, and everything else. They all can be made smoother and easier and more efficient and more compassionate.
Yeah, thank you very much. I have to say we talk a lot around, wicked problems and intractable problems, and everyone admiring the problem and all this sort of stuff. So it is actually really extra fantastic to talk about actually solving problems and going, no, okay, these things are solvable. It sounds like you've been very lucky, and CBUS has been very, very wise to actually bring someone in like yourself and then give you the space to actually think about it and figure out what the best thing to do is, because quite often that's what gets put in the PowerPoint up front of how we're going to solve it. But the reality is when push comes to shove, we don't really have the appetite for this, and that's too hard, and that takes too long, and we're not really interested in going down that route. So you do end up just sort of papering over whatever you've got.
That is actually a really, really good point. The executive support to continue with what was the initial idea was absolutely paramount to the success of this.
Yeah.
And giving me the space to continue and explore has been really it gives me the encouragement then to go and look at the next thing. And I think for internally as well, it gives the team a positive attitude in relation to how we are supporting our members, and that we are comfortable to be bold after being in such a challenging situation, because we do have the people internally and to do these things. So I think it is really important to acknowledge that, because it could have very easily been, oh wow, that's a bit too hard. I worked very closely with legal, product. We're instrumental as well, because binding nominations aren't claims. That's product.
No.
So it's really been a real significant collaboration across various parts of the fund and buy-in. So that has definitely led to the success and enabling us to make these changes.
Yeah, change is a team sport. I love it.
Awesome, Kerry. Thanks so much for joining us. Really appreciate it.
Thank you.
Thanks so much, Kerry. This has been great.
Thanks for listening to That Super Show. We hope today's episode gave you something useful to take back to your team.
If you're thinking we should talk, we'd love to chat. You can book a meeting with either of us via the link in the